the more income that you show in retirement, the higher this IRMAA income related monthly adjustment amount could possibly be. And we're going to run through some examples. In 2026, there are roughly 67 million people in the United States who are on the Medicare plan. 1 in 10, or about 10% of those folks that are receiving Medicare, are subject to IRMAA costs. And this number continues to go up every year. In fact, the trustees report, the Medicare trustees report that came out last year, it's 267 pages. It's not a short read, but they estimate that IRMAA costs are going to increase by 30% over the next 3 years. And so I expect that more people will fall into this IRMAA bracket, or this IRMAA net, the surcharge that needs to be paid. Not only will they be paying, more people will be paying more, but I believe that the costs will also go up because Medicare premiums are determined by the overall cost of medical care. It's not like, your Social Security goes up by the rate of inflation per year. So that gets set every year, but medical costs don't stick to those kind of parameters. They just seem to go up at their own rates every single year. You can see that if your income as a single filer exceeds $109,000, this is your modified adjusted gross income, you're going to be paying the standard Medicare premium, which is $202.90. But once you go over that $109,000 in modified adjusted gross income, you're going to see that you will be paying more. In fact, the first bracket shows that you'll be paying $284.10 just for Part B. That's the Part B premium. And you'll also be paying $14.50 for Part D. So you'll be paying almost $300 per month as your Medicare premium plus the IRMAA surcharge. You'll notice on the married filing jointly columns that the numbers are doubled. So $109,000 becomes $218,000 in modified adjusted gross income. And that bracket goes up to $274,000 in modified adjusted gross income. But the costs are virtually the same. That first bracket, the Medicare premium now jumps to $284.10 and $14.50 per filer. That is per filer, so per month per filer. So a married filing jointly couple will be paying roughly $600, and that gets deducted from your Social Security payment. Say you're 65 or 66, have not yet started collecting Social Security, you get a bill from Medicare for these numbers. But let's put this all into a scenario and see how this is going to impact someone with real numbers. In this first scenario, we've got a married couple filing jointly. So they have a pension that comes in about $3,500 per month. So they've got $42,000 in taxable income there. They both receive Social Security combined. That is $68,000. So they're bringing in $5,666 per month between the two of them. And that's about $68,000. Now, when you're calculating your modified adjusted gross income, 85% of your Social Security income is considered taxable, not the whole thing. So their taxable portion of this will be $57,800. They receive interest and dividends, $30,000, and they withdrew $75,000 from retirement accounts, pre-tax retirement accounts. So their gross income is $215,000. Their modified adjusted gross income is $204,000, $204,800. So at this point, they are not subject to IRMAA because the first bracket where IRMAA kicks in for a married couple filing jointly is $218,000. However, before the end of the year 2024, they decided that they were going to sell a few investments for whatever reason. They needed the money, or they just wanted to take some profits on different investments. And so the taxable portion of the sale worked out to be $18,000. This was just enough. $222,800 is now their modified adjusted gross income. This is just enough to make them now subject to IRMAA. And so their costs will now be $298.60 times two because they're married filing jointly. And so they'll have a Medicare surcharge of nearly $600 per month. This is the part, though, that a lot of people don't talk about. What happens with a Medicare surcharge and IRMAA after one spouse passes away. So let's go and look at this scenario. After the first spouse passes away, the numbers really don't change all that much. The pension, because they had 100% joint annuity on their pension, that stays the same. So they're still collecting, the surviving spouse collects $3,500 a month or $42,000. Social Security gets cut in half. So they're now receiving, instead of $68,000, they're now getting $34,000 a month. The taxable portion for modified adjusted gross income is 85% of that number, or $28,900. They still receive the same interest and dividends. They're still taking money from retirement accounts, whether it's due to RMDs or they need this to cover their living expenses. So the surviving spouse now shows modified adjusted gross income of $175,900. At this point, they are now subject to, the surviving spouse is now subject to IRMAA, and the cost just for one person will be $587.90 per month. Virtually the same cost as it was for two will now be the cost for one. And if the surviving spouse decided to go ahead and still sell stocks to either realize a profit or take money out to buy a car, in this scenario, the taxable gain from the sale is the same as in the first scenario, another $18,000. This increases their modified adjusted gross income, but look what does not happen. So the IRMAA cost did not increase. It stayed the same as it was. And so you want to be cognizant of the fact that there are brackets here that we can stay within. This is why you want to work with your planner as the year goes on to see where your income is lining up. For a single filer, you can go from $171,000 in modified adjusted gross income up to $205,000. The cost is $527 per month. It's a lot of money, but look what happens when you exceed $205,000. The modified adjusted gross income now jumps up. The cost for Part B alone goes from $527 a month to almost $650 a month. This is why you need to be working with a planner and measure your numbers as you're going throughout the year. These numbers get reset every single year. So it's important to stay on top of this and work with someone who is cognizant of these things happening.